Something massive just happened in the American auto market, and nobody saw it coming. Toyota has just sent shockwaves across the entire industry with a move so bold, so unexpected, that it's left competitors scrambling, dealerships stunned, and buyers flooding showrooms overnight. Reports are coming in that Toyota has unleashed massive discounts across its truck lineup we're talking about, price cuts that seem almost unreal. The legendary Tundra and Tacoma, once sitting in the premium price range, are now being offered with markdowns so steep that industry insiders are calling it a market reset. Trucks that once sold for $55,000 to $65,000 are now being listed close to $35,000. And in some regions, even lower with trade-in bonuses and financing incentives. It's not just a promotion, it's a statement. What Toyota just did is nothing short of a strategic earthquake. By slashing prices across their truck portfolio, they've effectively pulled the rug out from under their competitors. Ford, GM, and Ram, the traditional truck giants, are suddenly facing a nightmare scenario. Their massive inventories, already piling up due to slowing sales and rising interest rates, are now being compared to Toyota's newly discounted lineup that offers the same reliability, better resale value, and now, shockingly, a lower price tag. Industry analysts say Toyota's move wasn't impulsive, it's surgical. They saw the perfect storm: high dealer inventories, shrinking consumer confidence, and a market saturated with overpriced trucks. And they struck first. Automakers across Detroit are in full-blown panic mode. Ford dealers are reportedly calling for emergency meetings to reevaluate F-150 pricing. GM's Silverado lineup, which recently rolled out new incentives, now looks overpriced next to Toyota's deals. Ram, which had been relying on luxury trims to drive profits, suddenly finds itself with trucks sitting unsold. Toyota just flipped the entire value perception of the truck market, and the ripple effect is spreading fast. Buyers, on the other hand, are in disbelief. Truck enthusiasts who had been priced out of the market for years are suddenly seeing dream deals pop up overnight. Social media is exploding with posts of customers showing off their new Toyotas, boasting about how they saved tens of thousands compared to similar models from the Big Three. Online forums are calling this the Toyota takeover, and many are speculating that this could trigger the most aggressive price war the truck segment has seen in decades. Dealerships are feeling the shock in real time. Toyota lots are packed with test drives and inquiries, while nearby Ford and GM dealers are reporting sharp drops in showroom traffic. Salespeople from rival brands are admitting off the record that customers are walking in, comparing prices, and walking straight out to Toyota dealerships. The resale market is taking a hit too. Used truck values are dipping as the new Toyota discounts make even late-model pre-owned trucks look overpriced. And the long-term impact? That's where things get really interesting. Analysts believe this could force a complete recalibration of truck pricing across the board. If Ford or GM decide to match Toyota's cuts, profit margins could evaporate overnight, shaking investor confidence and possibly triggering layoffs or production cuts. But if they hold firm on pricing, they risk losing a generation of buyers who are now seeing Toyota as the smarter, more affordable choice. Either way, the balance of power in America's truck market has shifted, and it might never be the same again. But here's the real twist: insiders say Toyota might not even be done yet, because what's happening behind closed doors at Toyota suggests this is just the opening move in a much bigger strategy. Leaked reports and dealer memos hint that Toyota's next wave of incentives could target not just the Tundra and Tacoma, but the SUV lineup as well, potentially dragging the entire midsize and full-size market into a spiral of aggressive discounting. And here's the kicker: Toyota's supply chain advantage, especially in hybrid and fuel-efficient powertrains, means they can afford to take this hit longer than anyone else. While Ford and GM are still wrestling with production costs and EV transitions, Toyota is quietly using its stability to buy market share, customer loyalty, and brand dominance in a single calculated strike. Industry insiders are calling this a masterclass in economic warfare. Think about it: Toyota didn't just discount their trucks. They positioned themselves as the hero for everyday Americans who've been priced out of reliable vehicles. After years of record-breaking MSRPs, high interest rates, and dwindling affordability, Toyota is rewriting the narrative. They're not just selling trucks, they're selling trust, dependability, and now value. And that combination is lethal in today's market. Ford executives are reportedly furious. Internal documents are circulating, urging dealers to hold the line on pricing, while quietly testing new rebate programs. GM, caught in the middle of an EV push and slowing Silverado sales, is in an even tougher spot. They can't afford to slash prices too deeply without hurting their EV investments. But they can't ignore the sales momentum Toyota is building. Ram's response so far has been cautious small incentives, regional offers, but nothing that can match Toyota's nationwide assault. Every automaker is watching, waiting, and hoping this storm passes, but it's not passing, it's growing. Meanwhile, on the buyer side, something even more fascinating is happening. Consumer psychology is shifting. For years, buyers associated American trucks with dominance, power, and resale strength. But now, Toyota's move is challenging that loyalty head-on. Suddenly, buyers who wouldn't even have considered a Japanese truck are taking test drives, running numbers, and realizing they can get more truck for less money and with better reliability. Search trends show spikes in Toyota truck inquiries, and dealership appointment systems are reportedly overwhelmed in key markets like Texas, Florida, and California. Dealers themselves are walking a fine line. Some Toyota dealerships are celebrating record-breaking weekends, selling out inventory faster than it arrives. Others are quietly warning that the supply-demand imbalance could soon flip, that Toyota might not be able to keep up if demand surges too fast. Meanwhile, Ford and GM dealerships are pressuring corporate headquarters for relief, either through better incentives or subsidized financing just to stay competitive. But the ripple effect extends far beyond new sales. Used car dealers are starting to panic too. Prices for used F-150s, Silverados, and Rams are beginning to soften as buyers shift focus to Toyota's discounted new trucks. Auction prices are dropping, trade-in values are slipping, and the entire resale ecosystem is feeling the tremor. If Toyota keeps this up, the used truck market could face its steepest correction in over a decade. And still, the question lingers: why now? Why did Toyota decide to strike at this exact moment? Some analysts believe it's a counterattack against the EV wave, a way to dominate the internal combustion market before full electrification sets in. Others think Toyota is taking advantage of the chaos in the global supply chain, using its efficiency and financial strength to crush weaker competitors. Whatever the motive, it's working, and the rest of the industry knows it. But what's even more intriguing are the rumors that this strategy isn't just about discounts, because according to several insider reports, Toyota's real play might involve reshaping the very foundation of how trucks are sold in America. Sources close to the company suggest that Toyota is quietly testing a new direct-to-consumer sales model in select markets, something that could completely bypass traditional dealership pricing games. Imagine a system where customers lock in their truck online, choose the trim, color, and financing, and get a transparent, no-haggle price that undercuts competitors by thousands. If that's true, then this isn't just about discounts, it's about disrupting the decades-old dealership system itself. And that's what's making Detroit nervous. Because if Toyota manages to merge affordability with transparency, they won't just win buyers, they'll own buyer trust. That's something no rebate or flashy marketing campaign can buy. Ford's dealer network is already pushing back, warning corporate that if Toyota pulls this off successfully, it could change buyer expectations forever. Customers will no longer tolerate inflated markups or endless dealership fees when Toyota's offering a streamlined, stress-free purchase experience at nearly half the cost of a competitor's truck. Behind the scenes, Ford and GM are reportedly reaching out to suppliers, trying to negotiate lower part costs to make their own price cuts viable. But the problem is Toyota's efficiency advantage didn't happen overnight. They've spent decades fine-tuning production, optimizing supply chains, and maintaining relationships with parts manufacturers that can't simply be replicated in a few months. So even if Ford or GM decide to retaliate, they'll be doing it from a position of weakness, while Toyota operates from strength. Buyers, meanwhile, are growing more skeptical of the so-called Big Three. Online conversations are shifting rapidly. Truck owners are posting side-by-side comparisons showing how Toyota's trucks now outperform American rivals, not just in price, but also in fuel economy, reliability, and long-term maintenance costs. It's like the entire narrative has flipped, and it happened almost overnight. Toyota's marketing team hasn't even had to say much. The discounts alone are doing the talking. Dealership morale among competitors is plummeting. Sales staff are reporting slower traffic, longer lot times, and frustrated managers slashing commissions to move inventory. Some dealers have started offering unofficial markdowns just to stay relevant, but it's not working. Customers have already noticed the imbalance. Toyota's lots, on the other hand, are buzzing with energy. Many dealers have wait lists forming for certain trims, and used Toyota trucks are even holding their value better despite the discounts. A paradox that has analysts scratching their heads. Financial experts are now watching stock prices closely. If this price war intensifies, profit margins across the truck sector could nosedive. Investors who once bet big on American truck dominance are quietly shifting their portfolios toward Toyota and its suppliers. The message is clear. Toyota isn't just competing. They're positioning themselves as the new center of gravity in the U.S. truck market. And as if that weren't enough, whispers from within Toyota's North American division hint that the company may soon roll out a nationwide loyalty trade-in program designed to pull existing Ford, Chevy, and Ram owners straight into Toyota showrooms with record-breaking offers for their used trucks. If that happens, it could accelerate the market shift even further, pulling loyalists away from the brands they've trusted for generations and into Toyota's orbit. But the most jaw-dropping part of all this isn't just what Toyota is doing now, it's what they're rumored to be preparing next. Because insiders are whispering that Toyota's next phase could introduce something even more disruptive, a hybrid revolution in the truck segment, unlike anything the US market has ever seen. Sources close to Toyota's engineering division claim that the company is preparing to roll out aggressive hybrid powertrain options across its entire truck lineup. But here's the kicker without increasing the price. Imagine walking into a dealership and seeing a fully capable hybrid, Tundra or Tacoma, priced below a standard gas-powered competitor. That alone could send shockwaves through the auto industry's core. The automaker that was once seen as cautious and conservative is now leading the most aggressive pricing revolution in modern history. But there's one more layer to this unfolding story that's starting to emerge. Something Toyota has been keeping under wraps, something that could explain why they've chosen this exact moment to unleash such an audacious move, because if the latest leaks are even partially true, Toyota's ultimate play might not just be about trucks, discounts, or market share, it could be about control. Several reports hint that Toyota has been quietly building a massive data-driven infrastructure to predict, influence, and even preempt shifts in consumer buying behavior. Think about it. While every other automaker was focused on quarterly profits and EV hype, Toyota was quietly collecting decades of ownership data maintenance patterns, trade-in cycles, regional preferences, and even financing trends. And now it appears they're using that data to strike at the perfect moment, targeting their biggest opportunity the exact point when consumers are most price-sensitive and competitors are financially strained. This isn't random discounting, it's precision warfare. Toyota knows where buyers are most likely to defect from other brands, what income brackets are reaching peak affordability stress, and where dealership loyalty is weakest. Their discounts aren't evenly spread. They're concentrated in regions that were once strongholds for Ford, and GM Texas, the Midwest. Parts of the Southeast Toyota is surgically cutting into the heart of the American truck belt, undercutting rivals where it hurts the most. Industry insiders are stunned at the level of coordination. It's not just pricing, it's timing, supply allocation, and even marketing language. Toyota's new ads emphasize strength, legacy, and reliability phrases that have always belonged to American brands. Yet, Toyota is claiming them now, and consumers are buying in. Focus groups show a dramatic perception shift. Truck buyers are no longer saying Toyota builds good trucks for the price. They're saying Toyota builds the best trucks, period. That's a branding earthquake, the kind that redefines markets for decades. At the same time, Toyota's leadership appears to be making another shrewd calculation: the EV slowdown. With interest rates high and EV demand softening, American automakers are stuck in an expensive transition that's not paying off fast enough. Toyota, long criticized for being cautious about full electrification, suddenly looks brilliant. By flooding the market with cheaper hybrid trucks while competitors struggle to sell pricey EVs, Toyota is rewriting the rulebook on what the future of driving actually looks like. Dealers, too, are realizing the shift. Many franchise owners who once complained about Toyota's tight inventory controls are now grateful. While Ford and GM lots overflow with unsold EVs and gas trucks, Toyota's streamlined supply chain ensures that every discounted vehicle that hits the lot moves fast. It's an efficiency advantage that most automakers can't replicate, and Toyota knows it. Meanwhile, executives from rival brands are calling emergency summits, reaching out to advertising agencies, suppliers, and financial partners, trying to craft a response that doesn't look like panic. But behind closed doors, panic is exactly what it is. Some Ford insiders have already floated the idea of cutting F-150 production temporarily to reduce inventory pressure. GM, according to several reports, is evaluating whether it can afford a new wave of rebates on Silverado models, even if it means taking losses through the first half of next year. Ram's response has been eerily quiet, a sign that they might be bracing for a deeper price cut cycle they can't win. And yet, even as the chaos unfolds, Toyota is staying silent. No press conferences, no flashy announcements, just steady, deliberate execution. That's the most unsettling part for its competitors. Toyota doesn't need to say anything. Their trucks, their pricing, and their timing are doing all the talking. But now, a few analysts are beginning to connect dots that no one has fully confirmed. Yet whispers that Toyota's next phase won't just affect automakers, it could shake the entire automotive ecosystem, lenders, suppliers, and even energy companies. Because if Toyota's rumored next move comes true, then what comes next could change the very foundation of the American auto industry. Those same insider reports now point to Toyota preparing a national-scale hybrid infrastructure initiative, one that would partner with banks, fuel companies, and tech firms to make owning and maintaining a Toyota hybrid easier, cheaper, and more accessible than ever before. Think about that, not just selling trucks, but building an entire ecosystem around them. Preferred financing with lower interest rates, exclusive hybrid maintenance packages, and even fuel partnerships offering loyalty discounts to Toyota owners. It's not just about making the sale, it's about creating a lifetime customer. If that becomes reality, it means Toyota won't just dominate vehicle sales, they'll dominate everything connected to vehicle ownership. Insurance partnerships, financing networks, service contracts, resale platforms, all interconnected in a way that locks in the customer and locks out the competition. Ford, GM, and Ram would be left fighting not just for sales, but for relevance in a landscape that Toyota quietly rewired beneath them. Economists are already calling this the dawn of a Toyota economy, where their influence extends far beyond dealerships and assembly lines. Even energy analysts are starting to pay attention. If Toyota successfully keeps millions of drivers in efficient hybrid trucks rather than EVs, it could slow the demand for charging infrastructure and alter how fuel markets evolve over the next decade. In other words, Toyota isn't just winning in showrooms, they're shaping the future of transportation policy, energy consumption, and consumer behavior in one sweeping motion. And as all of this unfolds, American automakers find themselves in a position they haven't faced in nearly a century playing defense. Ford is scrambling to rebrand its next-generation trucks, GM is reportedly slashing marketing budgets just to sustain discounts, and RAM is stuck between repositioning itself as premium or following Toyota into the value war. Meanwhile, Toyota stands at the center, calm, deliberate, and completely in control of the narrative. Buyers, too, are waking up to what this moment really represents. For the first time in years, the power is back in the hands of the consumer. People are lining up at dealerships not because they're desperate, but because they finally have options that make sense. Toyota's move has forced the entire industry to face a truth it's been avoiding for years, that affordability, efficiency, and trust are what truly drive loyalty, not just flashy ads or national pride. So yes, Toyota just crushed the US auto market. But it's not the kind of crushing blow that ends the game, it's the kind that resets the rules entirely. A new price war is on, a new balance of power is emerging, and every automaker in America is scrambling to catch up. Because right now, Toyota isn't just selling trucks, they're selling the future. And for the first time in a long, long time, the rest of the industry is realizing that the future might no longer belong to them. And this is only the begin.